Grahak Sathi, 5th July 2025, Volume 6, Number 1. Opt for government saving scheme for safe risk-free return. A guide for government saving and investment schemes. Saving is the process of setting aside a portion of your income for the future. It helps you build a financial reserve for future planned expenses like a house purchase or unexpected events like medical emergencies. Your selection of savings and investment options should be based on security, liquidity, accessibility, returns, as well as your risk-taking ability. If market-based investments like equities are too risky for you, then fixed income funds, deposit and the various government schemes are good alternatives. Several government-backed saving and investment schemes are available to Indians that are safe and give you good returns and assured regular income. They are characterized by features like capital safety, regular income, and tax benefits. Some schemes are specifically designed senior citizens age 60 and above. Given here is a comprehensive guide to major government-backed saving and investment schemes with eligibility, feature, return, tax benefit, how to invest, etc. Study the feature and benefit to make an informed investment choice to best suit your needs. Senior Citizen Savings Scheme SCSS to provide safe regular income to senior citizens post-retirement. Eligibility: Indian citizen age 60 plus or 55 plus if retired under VRS. Interest 8.2% PA Q1F25 April-June 2025. Revised quarterly, compounded quarterly, paid quarterly. Tenure 5 years, extendable by 3 years. Investment limit: maximum rupees 30 lakhs, minimum rupees 1000 and in multiple thereof open account individually or jointly with spouse. Taxation: eligible for ATC deduction. Interest is taxable. TDS deduction applicable. Premature withdrawal closure: no interest payable if closed within first year. After 1 year with 1.5% penalty. After 2 years with 1% penalty. Where to open? Post offices, authorized banks e.g. SBI, PNB, HDFC. Public Provident Fund PPF for long term wealth building with tax benefits. Eligibility: Indian resident, individuals only, one account per person, no joint accounts. Interest 7.1% PA Q1 FY25. Tenure 15 years, extendable in blocks of 5 years. Investment limit: minimum rupees 500 year, maximum rupees 1.5 lakh year deposit. Allowed in lump sum or installments, maximum 12 year. Taxation: EEE, exempt on investment, interest and maturity under section 80C. Premature closure: allowed after 5 years in case of life threatening disease, for higher education or change of resident status. Withdrawal loan: loan available after 1 year, only one loan in one financial year. Second loan not given till first loan is not repaid. Post Office Monthly Income Scheme POMIS. For steady monthly income with principal safety for risk aware savers. Eligibility: Indian citizens 80 plus, popular among seniors. Interest 7.4% PA. Q1 FY25. Paid monthly. Tenure 5 years. Investment limit: maximum rupees 9 lakh single account, rupees 15 lakh joint account, minimum rupees 1000, further in multiple of rupees 1000. Taxation: no tax deduction or exemption, interest is taxable. Premature withdrawal: penalty on premature withdrawal, no benefit if within 1 year, 2% penalty between 1 to 3 years, 1% between 3 to 5 years. Maturity: at maturity you can either withdraw your original deposit amount or renew the account. Sukanya Samriddhi Yojana SSY, to provide secure financial future for girl children, education, marriage. Eligibility: girl child below 10 years, maximum 2 girls per family, exemption twins, triplets. Who can open? Parents or guardians. Interest 8.2% PA. Q1 FY25. Compounded yearly. Tenure 21 years from opening or until marriage after 18. Investment limit: maximum rupees 1.5 lakh year, minimum rupees 250 year. Taxation: fully exempt EEE, exempt under section 80C. Withdrawal: 50% at age 18 for higher education, 100% after 21 year or on marriage at 80 plus. National Saving Certificate NSC, safe fixed return tax saving investment with low risk, preferred by senior for safe mid-term saving. Eligibility: any Indian, no upper age limit. Interest 7.7% PA. Q1 FY25. Compounded annually, paid at maturity. Tenure 5 years. Investment limit: minimum rupees 1000, no maximum limit. Taxation: eligible for 80C deduction, interest is deemed reinvested and eligible for 80C deduction except in last year. Final year interest is taxable. Premature exit: only in case of death of holder, court order or forfeiture by pledge. Kisan Vikas Patra KVP, best for long term capital doubling with low risk. Eligibility: Indian citizens, individual only, no age restriction. Interest 7.5% PA. Q1 FY25. Compounded annually. Maturity tenure: amount invested double in 115 months, 9 years and 7 months. Investment limit: minimum rupees 1000, no maximum limit. Taxation: no tax benefit, interest taxable. Premature withdrawal allowed after 2.5 years. Fixed deposit: senior citizen fixed deposit, bank FDs, offered by all public and private banks, low risk, backed by banks covered under rupees 5 lakh. DICGC insurance. Eligibility: any Indian citizen age 18 plus, minor can invest through guardian. Senior citizen FDs for age 60%. Interest around 3.5% to 8.5%, varies by bank and tenure. For senior citizen FD, additional 0.25% to 0.75% over regular FDs, paid at maturity or can be taken monthly or quarterly, yearly. Tenure 7 days to 10 years, typically 5 to 10 years for higher return. Investment limit: minimum investment varies from rupees 1,000 to rupees 10,000 plus. Premature withdrawal allowed with penalty usually 0.5%, 1% lower interest depending on period. Loan against FD usually up to 90% of FD value. Taxation interest taxable. TDS applicable, submit form 15H to avoid TDS if income is below threshold. Special FD scheme SBI Wave Care, HDFC Senior Citizen Care, etc. offer extra benefits. RBI floating rate saving bond, risk free investment with floating interest rate. Eligibility Indian citizens, Hindu undivided families, HUFS, can be held by anyone either singly or jointly. Available at nationalized banks, some private sector bank, HDFC, ICICI, IDBI, Axis banks. Interest 8.05% as of January-June 2025. Revised by every 6 months. Interest is paid twice a year on 1st July and 1st January. Tenure 7 year. Investment limit minimum rupees 1,000. No maximum limit. Taxation interest taxable, TDS applicable. Premature exit liquidity. Premature exit allowed only for senior citizens after lock-in period. Penalty for premature redemption is 50% of last 6 month interest payment. Lock-in period for premature exit. 6 year for age 60 to 70 year, 5 year for age 70 to 80 year, 4 year for age 80 plus. National Pension System NPS for retirement planning via market link return provides flexibility in investment amount and timing according to financial goals and risk tolerance. Eligibility Indian citizen age 80 to 70. 2 accounts offered. Tier 1 retirement account mandatory lock till 60. Minimum investment of rupees 500 initially and rupees 6,000 annually. Tier 2 voluntary saving account optional. Flexible withdrawals payment of rupees 1,000 on opening and subsequent top-ups of rupees 250. Maintain a yearly balance of over rupees 2,000. Interest return 8 to 10%. Market link not fixed. Fund managers choose between multiple government approved ones. Taxation Tier 1 rupees 1.5 lakh under 80 CCD 1 plus additional rupees 50,000 under 80 CCD 1B. Tier 2 no tax benefit except for government employees. Withdrawal of Tier 1 account, partial withdrawals allowed after 3 years. At age 60, 60% tax free lump sum plus 40% for mandatory annuity. Atal Pension Yojana APY, low cost guaranteed pension scheme for unorganized sector. Eligibility entry age 80 to 40, not for income taxpayers. Investment limit premium payable monthly, quarterly or half yearly over a minimum of 20 years. Premium depend on entry age and desired pension. Individuals already enrolled can continue contributions until 60. Must have a bank account. Fixed pension rupees 1,000, rupees 5,000 month after age 60. Spouse continues to get pension upon subscriber's death or corpus is returned to nominee. Voluntary exit before 60 allowed. Only contributions plus interest return. Pension amount can be downgraded, usually once annually in April. Editorial team Chairman CERC and Torch Praful Amin. Chairman CERS Walter Vieira. CEO Anindita Mehta. Associate Editors Anusha Iyer, Rashmi Goyal. Editorial Assistants तिथि भंडारी, वंदना यादव. Address: Consumer Education and Research Center, 802 Grahak Suvidha Kendra, Sakar 2, next to Alice Bridge Police Station, Ashram Road, Ahmedabad 380006. Phone number 079 3533 7262. Email address complaints@cercindia.org. Helpline number 1800 233 0332. ध्वनि मुद्रण शांता मेहता डिजिटल टॉकिंग बुक लाइब्रेरी, अंजन मंडल, वस्त्रापुर, अहमदाबाद 380015. वॉइस ओवर बाय आनल दवे.